What's going on, everybody? This is Phil from Millennial Money Gains, and welcome back to a brand new video. In today's video, we are going through my whole entire stock portfolio. We are going to talk about the dividends that I earned for the month of December, seeing that it is the end of the month and the end of the year. So we're going to go over my yearly totals as well, and definitely keep you guys updated on how the portfolio is doing. If you guys are new here, welcome to the channel. My name is Phil, and I'm with Millennial Money Gains. On this channel, we talk about daily stock market videos, investing videos, dividends, anything that has to do with investing you can find right on this channel. So if you guys are interested in that, please make sure you hit that like button and subscribe to the channel. Now, let's hop right into the portfolio. Before anyone gets mad about the clickbait, this is my portfolio here. Yes, it is not $20,000 right now, but I do have $2,000 sitting on margin that is invested in this account, so therefore it is over a $20,000 portfolio. But hopping right into the portfolio, first off, we are going to go through all the stocks and just show you exactly what I'm holding, and then go through the dividends for the month of December. So the portfolio is currently sitting at $18,463. Now, we are up about 0.2% on the day, which is just about $36. And we have been doing fairly well in this portfolio. So the past week, we are up 1.42%, which is $250. In the past month, we are up 6.38%, which is $1,100. And in the past 3 months, we are up 7.4%, which is $1,270. So doing pretty well in this portfolio so far. Now let's hop into my different positions in the stock. So the first one I have is AT&T. So my current average cost for AT&T is $27.77. So it's pretty high. This one has been beating me down a bit. I have a total of 106.9 shares of AT&T, and I am down about 11% on the position. So I definitely want to average down on AT&T. I think they are going to be a wonderful dividend company. Even when they do cut their dividend, I do think it will be still a very good company. And when they do complete the merger, I do see value in the company. Moving on to the next stock that is in the portfolio, we have Valet. So Valet is another position that I am down a lot on. These are my two positions that have hurt me a lot. My average cost is $16.99. It's currently trading at $13.62, so I'm down almost 20% on the position, which is about $372. So not too great there. Valet, I don't think I'm going to be adding any more into it until I get my dividends. They pay semi-annual dividends. So once I get those dividends, I'll purchase some more shares in Valet, just to average down a little bit. When I do get that dividend, I should be able to purchase almost like about 8 to 10 shares or so, based on how much the dividend is. My third stock that I have in the portfolio is Realty Income. By the way, guys, this is going to be a rather long video, so if you want, grab a snack. Make sure you guys are comfortable, because we are going to really dive into this portfolio. So Realty Income, currently trading at $71.61. My average cost is $67.19. I currently have almost 51 shares of Realty Income, and I am up about 6.5%, which is $223. Realty Income is one of my favorite dividend stocks, and it is the monthly paying dividend company. Everyone who is involved in dividends knows who Realty Income is, so not much to say about them. I will purchase more shares whenever I can with Realty Income. Next up, I have Intel, ticker symbol INTC. So we have currently about 56.5 shares of Intel with an average cost of $53.50. I am down about 3% on the position, but I'm very bullish on Intel. I think it is a strong company, and I'm just collecting the dividend as I keep adding and loading up on this position, because I do think it is a rather strong company that you can be purchasing on a dip right now. So they are up about 10% on the year. We're looking at their 5-year chart. Not too impressive. They're up about 40%, so not bad. But they are looking at the lower end of their chart here. So you have this long consolidation period here, which I really think is just everyone loading up on it. I do see Intel as being a $75 stock in the future. So that's why I'm loading up on it now. It may take a while to get there, but I do think eventually they will have the power to do so. They have growing revenue, and they're just a very, very good, stable company. The next stock on our list is ABBV. ABBV has been doing great for me. I currently own about 17 shares of ABBV. I am up 22.25% on my position, which is $423. So ABBV has been really doing great here. My average cost is $110.83. It's currently sitting at $135.50. ABBV has been having a remarkable month here. It's up 2.3% in the past week. In the past month, it is up 16%. So really, really nice going for ABBV there. I do think that we could be expecting a little bit of a pullback here. As you can tell, in the past 3 months, it's up almost 26%. So I do think, and in the past year, it's up about 30%. So I do think we can see a bit of a pullback here. Because just look at this 1 year chart. Look at that. That is just remarkable. So I do think we'll be expecting a little bit of a pullback here, but I'm not going to be adding any more to this position right now unless I do add from my dividends that I get from it. But really, ABBV has been the leader of my portfolio. And I really do love ABBV, and I would love to add more. I would just need it to dip down a little bit so I could get a little bit better cost here. The next stock in my portfolio is Enterprise Products, EPD. I'm down a little bit on this position, about $25, which is about almost 2.5%. My average cost is $22.17. I almost have 46 shares of EPD. They do pay a nice dividend. I do want to add a little bit more of EPD here. I definitely would like to increase my portfolio value in EPD. Maybe potentially on this dip. I think maybe I'll be looking to add more. They are looking like a pretty attractive price right now. They are on a little bit of a dip, not too much of a dip, but they do pay a nice dividend, so I may be looking to add more into EPD. Next up, we have QYLD. This is a monthly dividend ETF. This is where I have my margin on, so I currently have a market value of $3,500. Now, I believe about maybe $1,500 or so is on margin. So I have 156 shares of QYLD with an average cost of $22.65. So I'm up just about $12 on the position. But like I said, most of it's on margin just for that monthly dividend. They do pay a nice monthly dividend. So I do like that. And look, if you look down here, this is the top 10 holdings for the company. So they invest in things. They sell covered calls on things such as Apple, Microsoft, Amazon, Facebook, which is now Meta, Tesla, Nvidia, Google, Broadcom. So pretty big stocks there. They have an expense ratio of 0.6 according to Robinhood. But I think the dividend is worth it. As you can tell here, I am reinvesting my dividends, and I am currently able to buy more than one share every single month that I get this dividend, which is really nice. So this compound interest will really start loading up. Every time I am able to purchase one more share, I do gain about 20 cents in dividend income every single month. So that really compounding will just be remarkable over the long term, as long as QYLD doesn't change their company at all, change their fund. I really do think QYLD will be really big for this portfolio in terms of compound interest and building up the portfolio. Next stock we have is Apple. Ticker symbol is AAPL. Everyone knows Apple. This one has been a really good one for me. I currently own 9 shares. I would like to increase that a little bit. My average cost is $155.57. It's currently sitting at just about $180 or so. Apple is another one that's just been killing it for me. Past 3 months, they are up 26%. I'm up about 15.6% on the position, which is just over $218. I would like to keep adding to Apple. I see Apple as a forever holding, which means I will be holding Apple forever. They do pay a very small dividend of like 0.4%, something like that, 0.48 according to Robinhood. So they do pay a small dividend. I do think they will be able to increase that in the future, just based on all the cash that they have, and once they're done trying to grow their company. That is coming kind of, in my opinion, coming out of its growth stages of the company. Not looking at the stock market on this chart, you wouldn't be able to tell that in the past 5 years it's up 517%, which is an average annual yield of over 100% per year, which is just ridiculous. So it's definitely looking like it's still in its growth phase, but it's looking more towards like a safe stock rather than a growth stock right now, in my opinion. But you still do get that growth aspect. So I will keep trying to add Apple. I try to add about 1 share every single month to Apple and just hold it for the long run. Right now it is looking a little overextended, but I'm not really worried about that price for Apple right now, just because of how valuable the company is. Next stock is Lockheed Martin. Ticker symbol is LMT. Currently trading at $353.48. Now changing. Market is open. My average cost is $339.04. I only own a little bit more than a share. Up about 4% on the position, which is just $14. I did want to get into more Lockheed Martin, but it looks like they're coming off that dip that I initially got it on. I didn't have too much money when I first invested in this one. I was only able to buy 1 share, and that extra was from the dividend that I just received, which we'll talk more about later. I did want to add more to Lockheed Martin. I will still be looking to add more, just maybe not right now. I do see some potential problems with the company just based off of spending and government spending and whatnot. But Lockheed Martin, hard to go wrong there. I would like to add more, but I'm still waiting to see how this one plays out. And the last but not least stock in my portfolio is 3M. Ticker symbol is MMM. So I only have 5 shares right now of MMM. Average cost is $173.83. It's currently sitting at $177.63. So I'm up about 2% on the position, which is like $19 or so. Well, 3M, really just great dividend payer. They've been paying their dividends for more than, I think, 60 years. I think it's 63 years now they've been paying their dividends. So it's really just a very good dividend stock that I bought on a pretty decent dip. I will be looking to add more to 3M. This is another one where I just want to keep putting money in just because of their dividend that they pay out. Right now I only have 5 shares, but I would love to increase that in the future. So now let's go and let's talk about the dividends that I received for the month of December. So here you can tell my total cost here is, my total portfolio market value is $20,444. So I have about $2,000 in margin, and that's, like I said, all in. That's all in QYLD, all my margin. So here's my total return for the stock. So first one, like I said, ABBV, then Realty Income and Apple. It's just really, ABBV has been really outperforming, and I do really like to see ABBV continue to perform this way. I would like to receive more ABBV and buy more of ABBV, but I do think right now it is a little overpriced. But anyway, going into the dividends. So on December 1st, we started the month off pretty strong. We got $24.08 from QYLD. This one was reinvested. And then another one on December 1st we got from Intel, which was $19.50. So this one also reinvested into the company. Let's pull this down here. So we did receive about almost 35 cents per share for holding 56 shares. So next one should be a little bit more from Intel. Now looking at QYLD, I received 22 cents per share or so for holding 107 shares. I now own 156 shares. So that next dividend that I get next month should really be pretty nice from QYLD. Maybe be able to buy about a share and a half or so from QYLD, which will be very nice in terms of compound interest. So next, we received on December 15th a dividend from Realty Income. We received $12.42. This is a monthly payer for owning 50.5 shares. They did just increase their dividend, so it's 0.246 right now. They are monthly payers, so I do receive about this amount every single month from them. We will go more into when we go to my Excel sheet. We'll go into exactly how much I've received from Realty Income. And lastly, we had Lockheed Martin on December 27th, paid us $2.80. This one was also reinvested. We just own one share, right? So they pay $2.80 per quarter per share. So not the best month for dividends in my portfolio. We did receive a total of $58.80 in dividends, which was my lowest month since in the past 3 months, since September. But looking at here, we do have, it was pretty average month. I think next month, nothing is going to compare to October for a while until I get another dividend check from Valet. Valet was the big one in October there. So once I get another one from them, that will try to beat out October and maybe get a little bit more. So total passive income right now for the year, not what I received, just based off of annually, is $2,012, and that's just based off of my dividends, not just my dividends, but interest from other accounts and excuse me, and just other passive income things. So I just wanted to include that here, and that will show here. So my daily passive income is $5.51. My weekly is $38.69. My monthly is $167.67. My hourly passive income is 23 cents per hour, and my work hourly passive income, which is for 40 hours a week, is 97 cents per hour in passive income, per work hour in passive income. So I pretty much, this year, just starting in, I would like to say I just started in June, right? So about 6 months out of the year, I was able to increase my work hourly passive income by pretty much $1, which is pretty decent. It does give me about 4 or 5% raise, probably a little less than that, but it does give me an extra raise in passive income, and I will keep trying to be building this passive income. That way I keep getting more raises. So I'm really trying for next year. I really want to get my hourly passive income to about $1 per hour, no matter how much, every single hour, not per work hour. So $1 in passive income per hour by the end of next year would really be nice. That would lead us to $24 a day, and $24 a day will be an extra almost $9,000 in passive income. So I think that may be a little far-fetched. Obviously, I would have to increase my income a little bit in order to get there. So I would need to raise my total passive income by about $7,000 or so, which will be very difficult. So this may be a little bit far-fetched, but even if I could bring it to like about 75 cents, I would be happy per hour, which would give me about $18 a day and about $6,500 a year. So that one looks a little more achievable. Obviously, it will be very hard to get there as well. But now let's hop into the dividends that I received for each and every company so far. So for ABBV, we have received $20.84. Realty Income, we received $47.99. For Intel, we received $25.06. AT&T, $56.94. Valet is my biggest payer, $78.34. EPD, $20.25. QYLD, $43.59. Apple, 66 cents. And Lockheed Martin, $2.80. And I broke it down into this chart here. So obviously we have Valet beating out everything right now. And then AT&T is a second, and Realty Income is a close third. I do think QYLD will be passing Realty Income and eventually AT&T as we go throughout the further months. And I do think QYLD will be my biggest payer overall once it can pass Valet as well. Valet does only pay semi-annually, but they do have a pretty nice dividend. So looking here, this is for my monthly payers. We have QYLD. They did not pay me in the month of November. Not really sure what that's about, but I did not get paid from them at all in the month of November. I was maybe expecting to get a 2 in December because I didn't get from any in November, but not too sure what that's about. I hope that is just a one-time deal. But looking in July, that's the first time we invested in QYLD, the first dividend we got. We got $11.15. Then in August, it jumped to $11.55. In September, it jumped to $20.05. In October, it jumped to $20.89. November, like I said, we didn't get anything. And then December, $24.08. So we're really going to look at this increase. And I think next month will be my largest month of QYLD by far. Looking maybe getting about $30 in dividends from them next month, which will really be awesome. And we'll just be able to keep growing that every single month. Now looking at my next monthly payer is Realty Income. Started investing in them in June. I received $2.82. Then in July, $3.54. In August, $4.50. September, $4.51. October, $9.73. November, $10.47, and December, $12.42. So we have this nice steady growth here. It did increase by about double, a little more than double here from September to October. That is just because I ramped up on my shares there. I would like to buy more, but Realty Income will continue to pay me more and more each and every month as I keep reinvesting the dividends. The more I can make from them, the more I can reinvest in them and make every single month. That is how compound interest works. So looking at my portfolio diversification here, we have QYLD is about almost 15% of my portfolio, as well as AT&T. My biggest percentage is Realty Income, sitting at just over 20%. So as you can tell, I do love Realty Income. We have ABBV sitting at about 11.9%, which is probably a little bit higher now since the increase in share price. Then we have Enterprise Products sitting at 6%, Apple at 5.7%, Intel at 16.3%, Valet at 8.1%, and Lockheed Martin at 2.8%. And I just realized I don't have 3M this year, so I definitely have to update this a little bit. I should be doing this once a month, updating this, so I will be updating this right after this video. But I do have 3M in there. It's probably sitting about 6 to 7% or so of my portfolio. Maybe a little bit lower. Could be about 5 to 6% of my portfolio. But that is pretty much going to wrap up the video, guys. That is my dividend portfolio, my $20,000 dividend portfolio. If you guys did enjoy it, please make sure you smash that like button. I really do appreciate it. If you guys did take anything away from this video and want to see more, follow the journey, hit that subscribe button below. We do post here every single time the market is open. We go over what went on in the market for the day. So make sure you guys are subscribed to the channel and keeping up with my journey. Let me know how your dividend journey is going down in the comments below. I do appreciate you all for watching, and I will see you in the next video. Peace!